Okay, it looks like we got everybody, so we'll go ahead and call a meeting to order. Thanks for attending today's meeting and appreciate everybody hopping on. Brenna, it looks like you've got access to the participant list, so you're comfortable taking roll that way?
Yes.
Okay, so the first item on the agenda is approval of the July meeting minutes that were included in the email Brenna sent out yesterday. So hope everybody's had a chance to review those, and then I'd entertain a motion to approve those minutes if we're good to go.
This is Mike. I approve or move to approve.
I'll second.
Mike and Steve, any further discussion? All right, all those in favor say aye.
Aye.
Aye. Opposed? Okay, we've got meeting minutes approved. Next up on the agenda is an operational update. First off with new hires. And I'll turn it over to Randy on the operational update piece.
Yeah, so we've got, so I'm going to have Brenna do an introduction for one of their new hires. So I'll let you do that, Brenna, to start off with.
It's a comment, right? Okay. So good afternoon, everybody. Thanks. We are a little bit of technology stuff. We're Zooming the meetings live. So we use the Zoom system instead of a team system. So we appreciate everybody's patience. So I just wanted to introduce Angie Ament as our new employee in support of the North Dakota Public Health Insurance Trust. Her title is Benefits and Compliance Manager within SEEK. And so as part of the resources that we receive as the plan administrator in supporting the work that we do for North Dakota Public Health Insurance Trust, we use those dollars to support Angie's full-time work in regards to just some of the customer service and some of the work directly related to our members and of the trust. Angie comes with us with about 20 years of experience with the Grand Forks Public Schools in working in the benefits side with Grand Forks Public Schools. So just in the few weeks that I've been working with her and had a chance to work with her, just been very excited about having her here and the support that she can provide. And as we continue to grow and improve and increase the quality of the service and the customer service, she'll play an important role with SEEK.
Great.
All right, well, welcome, Angie.
Thank you. I'm excited to be here.
We can endorse Angie. We've known her for years and she is outstanding. So we're excited that she has joined as well. And so Brenna, I know you've got some update on the training that's been going on for HIPAA privacy security that I'll let you review with the board.
So we haven't actually started the training yet for the HIPAA, but I've been in contact with Sarah from Benefit Comply, and we're looking at probably the target timeframe was October to do the training, and it looks like we're still on track for that. October, beginning of November, we'll have training for everybody set up through them. So we're still on track to hit that target. So.
Okay. In addition to that training process that is being made available to all members at large, we're also suggesting that we update the participation agreement to include HIPAA privacy and security training for a designated individual within each organization. Also some updated COBRA language to meet some of the compliance requirements, Medicare Part D and other notice requirements that every employer is required to provide to their employees at large, and which will help in that facilitation, but it needs to be included in their participation agreement. And then the other part of that is that we'd work with the NDPHIT attorney once we've drafted the language for the update in the participation agreement. So once we've got that completely crafted, we will work with the attorney to make sure that we get the participation agreements updated. The next section is the review of the member survey. We didn't have time to review it at the last board meeting, but we conducted a survey in late May, early June to the members. Its focus was on the carrier experience, customer service, enrollment processes and platform, communications, and feedback on the product programs that are being offered, such as voluntary options and the wellness program. In summary, you probably had a chance to look at that survey result, hopefully. But these are the main topics that, as I just reviewed, in other words, what's most important to you as you consider plans, which carrier do you have a strong affinity or affiliation that you would like to have an affiliation with, the enrollment process, customer service, voluntary options, and then if they would prefer an in-visit open enrollment process or experience versus virtual. So I would just suggest that everybody take a look at those results. I think there was more positive overall than there were negative in almost every category. So that was encouraging, but we also taken some feedback from some of the negative areas to determine which will be part of this recommendations. I think that Bren's going to go into later on as to how you create a more structured operational process, because we get feedback obviously in that enrollment, whether it's the technology or the products, that we want to make sure and ensure that the member groups and the members or employees of the groups get the best experience that they can. The next section is as a follow-up from the last board meeting based on the actuarial study, was the actuary suggested that we looked at different stop loss levels given the size of the trust. So currently we're at $175,000 stop loss. And part of this analysis, we have a tool, it's called the high case analysis tool. Once we get the premium rates that are offered by Blue Cross in this case, we compare that rate of premium, which is a fixed cost, compared to our essentially our actuarial risk or the expected liability within each of those thresholds. So if we get a lower cost on premium, we still have liability. So if you move from a 175 to a 200, that expected additional liability is 227,000. If we move to a 250, then our expected liability is 557,000. And if we move from a 175 to 275,000, which is a $100,000 increase per member, then our expected liability is 279,000. Well, a little bit of a challenge as we met with the actuarial and underwriting team at Blue Cross. They asked us what our methodology was for determining this. And normally, I will just say, we see a much better savings on premium to take on more liability. Well, in this case, Blue Cross did not give us a lot of flexibility to reduce our cost. It's marginal at best. And so there's not the incentive. And I had a follow-up discussion with Blue Cross about this, and I have a meeting next week to go through this, because it's just, to be honest, it's a little bit frustrating because we've had good success and especially as we grow in membership, this is going to be a really important element. But because there's not much savings in these categories, we're suggesting that we just stay at the current $175,000 stop loss level for this coming year for the trust. I'll just stop there and ask if there's any questions on this piece of it. Nope.
Andy, did Blue Cross Blue Shield give you any reason why they wouldn't work with you on stop loss? Because normally you're right, you see a more substantial benefit when you're increasing your individual cost. Did they have any feedback on that?
They would, they did not respond as to their methodology. And that's the reason why I asked for a meeting. Actually, I talked to them yesterday and I said I need to meet because through this analysis, we've actually gone back multiple times trying to get something for them to respond to, and that hasn't occurred. But all of our other groups, actually, they have responded. And part of that is because we had competition. We actually have alternative stop loss rates in the competition of the marketplace with other groups that we don't have with Blue Cross. And it's a much larger discussion because this is what's prohibiting organizations, and particularly, and I made an appeal in my conversation yesterday to the senior leadership at Blue Cross, say, look, this is public money we're spending. Why are you doing this to us? This makes it really frustrating when we bring competitive quotes, like we brought Health Partners and Medica to our other groups, and they moved the needle big. And so this is going to lead to a much bigger discussion because I planted in the seed, particularly with Christy Huber, that this is not sustainable. Well, when I say it's not sustainable, it's not priced right and competitive to be correlated with public entities spending this money. And if you really want to help grow the competition market for essentially going after some NDPHIT business, which is what they suggested to us as part of this whole strategy, then we need to have a different approach to it. So that's the reason I've called for a meeting, and I'm just trying to confirm, but it looks like next Thursday that's going to occur, where we're going to get in front of them, and I'm going to share these numbers and our HCAT report and more details so that we can see if we can address this. And it has to do with admin, stop loss, Blue Alliance fees. That's why I say it's a much larger discussion that we seem to be consistently running into. So this is what it is, though, for what they haven't changed or come off this number at this point. If I have through this meeting, if they come back, maybe they will, but we still have a little bit of time to negotiate for January groups on the 175, and that's what I'm hoping for. But until then, we're
so Randy, this is Kyle. So again, I don't want to get too deep in the weeds today, but
yeah.
What is the major obstacle with that we have in order to create more competition for stop loss?
Well, okay, yeah. So I sent you that text, you and Brennan, yesterday, but it's the rules that they have around trusts. So Blue Cross.
So are those rules state or federal, or
they're
their
only
own
internal to
rules?
Blue Cross?
They're internal to Blue Cross Blue Shield?
Yes. It's nothing the state requires. So everything around stop loss, admin, all those pieces are all Blue Cross rules.
Okay. And that's fine. That's enough for today.
Yeah.
I just wanted to make sure if there was something else that we needed to do from a legislative standpoint, from Century Code, or how the VIBA is formed.
Well, that's a good point. And maybe we can have a follow-up discussion, because we should maybe have a discussion about how we approach public money entities within trust environments and bring it into a legislative discussion. But I know we don't have time
with the state insurance commissioner.
Or with the state insurance commissioner. I agree with that.
All right. That's what I just want to make sure that we keep that in front of us as we're moving up onto a legislative session. And, we just need to bring in the people to create that puts some pressure on is my point.
Yeah. And I agree. So we definitely should have a follow-up discussion about that.
Yep.
Okay.
If you want to invite me to the meeting next
yeah.
week, just send me a meeting invite. I'd be happy to join you.
I will do that, because we're talking.
Right.
Yeah, we're going to be talking. Yeah, once I get it confirmed, Kyle, I'll do that. I'll invite, because obviously Christy as well. So the next thing is just to give you some other updates. Operation, and we have the 14 school districts that we had at 10-1. All groups actually opted into the ENI EAP program. So that's been closed, and the invoices were sent out to all the groups coming on for October 1st and renewing. And then for the January, not all groups have finalized. Some did add the GAP program as they made changes to the out-of-pocket max. Remember, we tried to keep it really simple in this discussion with employers as to how they may want to look at their data, their experience, and their plan design for making some considerations of how to lower their increase. And that was actually really insightful for us. And I'll just a couple comments. One is we realized through this and that we need to give kind of a longer time period between knowing information about where they're going to be looking at for their loss history for the groups and the pool in order to do more education up front. So these city councils and commissioners and other decision-making bodies really need more education when it gets down to it. That's the bottom line. They have been used to just getting a piece of paper, as I mentioned before, and here's your increase. We want to tell you, we want to position ourselves differently than that. And that is, there is now data available. And we did share data with these groups, but there wasn't really enough time still, even with data, to help them understand what that data meant relative to their opportunities and strategies. So that just told us we have a lot more work to do in one-on-one education, literally holding hands, taking a much more proactive step way before the renewals so that these groups understand what's going on. They were open to it. Some of them had really embraced it, but I would say the majority just said, look, we're going to renew as is, we'll take the increase as is. So we did have 6 groups that did change their out-of-pocket max. 3 groups out of the entire pool for January did opt out of the E&I Next Gen. And then we have 14 new prospective groups. And one of the things that we did with the prospective groups is we're following the advent of what we talked at the last board meeting, and that was any group that would only be considered has to have a loss ratio below 90% and below to keep the kind of a better risk profile for the entire pool. The next
So Randy,
thing,
this is Kyle again. I have a question for you.
yeah.
So as we looked to put together a policy manual and some things that we've approved and start to create more to form the organization and some of those things that need to get into place. Do you see under 5A that 90% loss ratio as it says, you said we approved that, and I remember that process. Do you see that as a permanent policy, or are we using that as a guideline just for that particular thing? Or do you see that 90% loss ratio as where as a board, that's where we should look on a consistent basis to use that number, and we should put that as part of a policy manual?
I would suggest, and I think, we can have the actuary give us this kind of validation, but based on our experience, from what we took in on the initial rounds, especially, the initial January group, we think staying within that guideline of 90% or lower, it's still a guideline, but if you want to make it a policy, then we probably just need to get kind of the second opinion from the actuary. But I would say that is an important guideline to keep in play as until we get more experience within the pool.
Right. Yeah, and boards can, the board can overrule that policy on there's a process for that. But as we try to build a foundation, as we rotate board members and have some kind of onboarding, just trying to understand that better was why I asked.
Yeah, and so it's a little bit of fluid, but also it is a good guideline. The next area is on when we talk about this FSA program that we currently have with WEX that's built into our BSWIFT platform. One of the challenges that we have run into, we did it as the idea to create a better pricing and kind of convenience for groups when they're enrolling, that they can make their FSA elections right in BSWIFT. One of the challenges we've run into is that they actually have to reconcile within BSWIFT as well as in WEX. So it's almost like a two processes that the groups have to do because they're getting their billing statement directly from WEX. And there are other detail that they want to make sure is reconciled properly. So one of the suggestions that we have to simplify this for our members and their experience within BSWIP is actually say you could still do your FSA program through WEX, but it's not integrated in the platform. And because they still have to do it twice. They will have to do it twice if we keep it within the BSWIP platform. So again, going back to the idea of how do we simplify the member experience, this is one of those, I would say, commonly themed, challenges for those that are trying to reconcile the FSA process. So, that's what our recommendation is to help out the members and to make it easier for them. Any comments or questions about that? And the important thing about it is not necessarily a trust product. That's probably the most important. It was just a program that was made available and put into the platform for what we wanted to do for convenience for the employees for their deductions. So, yeah, given it's not necessarily a trust product, that's why we think that again it's easier to do it this by eliminating it off the platform. The next thing that we want to give updates to were the population health management. As you know, they came and did a presentation at the last board meeting. They have received the data from Blue Cross Blue Shield for their analysis. And it was probably a couple of weeks ago that they finally got what they needed. So now they are analyzing that data. They're going to put it in a format for the analysis and recommendations. And if they're, they've asked if they can present at the next board meeting their findings based on that data. So that would be, if it's okay, it would be an agenda item that we could review at the next board meeting. The next section is Remedy RX. This happens to be one of a Brown & Brown company, and what they do it for outside of our organization too, for employers across the country. But what they do is they compare the pharmacy rebates and pricing that is given from the manufacturer to, in this case, Prime Therapeutics, to validate that they are giving the employer the best, first of all, the contractual contract terms of their pricing for rebates and the manufacturer pricing. So we've discovered that that's inconsistent, and we've challenged Blue Cross many times on this whole topic, and I won't go into all the detail over the last 4 or 5 months, but this seemed, and I told them this is something that we're going to recommend to NDPHIT as well as our other clients. It's no cost. There is no cost to it, and essentially the way that they do this program is we gather all the information from Prime Therapeutics and Blue Cross. It goes into their analytic engine, and then they will come back with the report that will show the discrepancies in the contractual terms and the rebate terms that should have been given to the employer. And their target, they try to target about a 25, well, I should say it's a range. It can be anywhere from 10 to 25% in their savings. But that's generally what their experience has been. So if it's okay, since it's a no cost service, we'd like to deploy Remedy to do the monitoring, if you would, to ensure that the trust is getting all of its due relative to the manufacturer cost and the rebates. So I don't know if that requires a board action, given that there's no pricing attached to it. It's just a monitoring service. I don't know, Brendan, that's your question.
Is there any impact on our members? Like, will our members notice any changes because of this?
It's all back end. There's nothing that changes. It's just monitoring, literally.
Okay, and it just goes through an algorithm and then they kick out saying, here are some missed opportunities, and then the trust then is able to collect on them. How does that process work?
Yeah, so that's a good question. So what they do is that they will share this result with Blue Cross and Prime Therapeutics and ask for the missing money, basically. They'll identify it, show it in their contract terms versus the results, and then they'll identify the amount of the money that is due back to the employer based on the contract that's in place.
Have you used this service with other groups?
Me personally, no, but we've talked to our other offices that have, and they've shared really positive results on it. And I have to say, Brown & Brown purchased this company probably 6 or 8 months ago. And that's one of the reasons that, we don't have direct experience, but other offices around the country have and speak very highly of it.
And this is Stephanie, and I apologize. I do want to clarify Randy's point about there is no cost for the initial analysis. There is a cost if they're able to achieve those savings. And
That's right. That's
savings.
true.
So there will be a fee charged if savings are achieved.
Is that the percentage that you mentioned there, that Remedy RX will have a percentage
Stephanie,
of the savings?
Yes, Stephanie, you can clarify that first as well, but I think that is the percentage. Is that correct, Stephanie?
I did not input the savings, the target savings.
No, I'm talking about the cost to the.
Oh, I would have to verify a contract. I've not reviewed a contract to determine what percentage of the savings they will take.
So probably the best way to approach this then, Brennan and board, is that we'll get those terms and share it, and then it could be voted at the next, once we have more detail, because we just barely did their presentation less than 2 weeks ago. So we've been talking to them for a long time, and we're introducing to other groups, but it might be best that we have all the details and it's all disclosed, that, we can explore the final detail and then share it, and then it can be voted on then if that's something you want to look at.
No, I think it seems
I would
like
like to see that. And,
Yeah.
and then we know
Yeah,
either we're saving nothing, or we could potentially have some kind of a savings, even if there's a percentage shared.
that's really the point that they follow under. But we all want it. We want to make sure what that percentage is so that we know what to expect. So.
And then the other question I would have is, so do they take their fee if we are able to collect?
Only.
Or do they take their fee if they show savings, but Blue Cross doesn't agree to those savings? What happens then? I mean, and how does that process play itself out? So does Remedy RX then, I mean,
I think and Stephanie, you can keep me honest here, but I think it's only if we can collect the money. Yeah, I think that's what they presented. Is that right, Stephanie?
That's my understanding as well. But again, I want to, if we're going to move forward with this, I would like to review the terms of the agreement to confirm that it's in writing, that is how that process works.
Yeah. Which is what we'll validate and then present kind of the final findings at the next board meeting.
And then I mean, on that collection piece, sure, we could present to Blue Cross or, somebody else saying, hey, you owe us X amount of money, but I can't imagine they're just going to willfully say, oh yeah, you're right, here's another, $100,000 or whatever. So how does that, does Remedy RX then, threaten litigation? I mean, how does this process play itself out that way?
Well, it's one of the reasons that we want to have a meeting in the minds with Blue Cross Blue Shield, that they agree that if there are findings, that it would be paid to the trust in advance before it's just done on the back end. So all those terms, even shared with the carrier, is done upfront.
So whether it's Prime Therapeutics or Blue Cross, they're agreeing to this process before it even starts. Yes. Okay.
And I have had those discussions with them 3 or 4 times already. I said, once we get those details, we'll share them with you. And so that's the other part of it that we just want to make sure is finalized. The only reason I brought it up today is because we have been in discussions and we think it's something good that could be the benefit to the trust if the recovery process works and it's done right. And we don't have a challenge with making sure that it's paid as a benefit back to the trust.
Okay, yeah, well, it seems on its face, it seems like a good deal, so.
Yep. And then the other thing.
So is the contract between Remedy RX and the board,
The trust.
the trust, that's what who the contract is between?
Yes, because they're doing that in behalf of the plan. And you're considered the employer, the trust is.
Right. So again, as a plan administrator, I'm going to start bringing up a few things. Is, at some point in time, Remedy RX had a competitor. So from a board perspective, other companies must be able to do this same thing. And so what are those fees that they're charged, and how do they relate to
Are they
other
market
competitive
competitive?
people with outside of Brown and Brown?
That's a good point, Kyle. And in fairness that, for the due diligence and disclosure process, we can look at all the options that could be similar organizations that are doing this. We do know of those that do pharmacy and analytics, we call it. I think in fairness, even before we go down this road, it's probably a focus of due diligence to ensure that the best deal is offered with this, if it's a similar type of service. And we're completely open to do that because obviously we do that for all of our clients. And in this case, it is the right thing to do, and we'll make sure we do that as well.
Okay.
We'll take that as an action on our side to do that. Then the 1094 and 1095 training. This is just a reporting requirement by employers that will be engaged in November. This is kind of the operations team that is involved in this. Then Thriver is launching a member group voluntary on-site screening and biometric service in 2023. It's basically an opt-in, and all the details will be forthcoming on what it would look like in the process for essentially all groups that are involved in the wellness program. And one of the survey results questions was about this particular area, and there was almost a 70% favorability to the idea of offering or allowing their employees to participate in this type of service. The next item is a Metlife tech credit. So over the past several months, I've been trying to negotiate with Metlife to receive a technology credit for the bSwift platform for their billing and enrollment processes. So one of our challenges was that it requires a special licensing because the Department of Insurance doesn't allow a carrier or broker organizations like us to actually receive any type of tech credit. In other states they do, but in this case they don't. So we had to go through a licensing process between our legal department and the Department of Insurance and Metlife legal team. But ultimately we got it negotiated. And the real value is it's a 3% of all the Metlife voluntary premium that comes through voluntary options for the employees. And it basically, it's going to be a dollar for dollar offset to the trust for its current cost for the bSwift platform and billing fees. And the idea is once we know what that is, we will we will provide a credit back to the trust for any monies paid for that 3%. And when I looked at it, it's probably going to be somewhere between $40,000 and $50,000 a year as a tech credit back as a value to the trust. It does require the authorization from the trust for Metlife to provide that tech credit, which is why we sent that out and it advanced the fee disclosure agreement. So any questions on that?
So that would, with my numbers, looking at it, looks like about half of, or just under half of what we pay as a trust to EB Tech would be potentially reimbursed through this program.
Well, I didn't look at the total annual numbers, but if we're getting $40,000 to $50,000 as a tech credit, whatever that is, percentage wise to the amount paid, that would be the way to look at it, in my opinion is. And the more enrollment we get in that voluntary, and that's a good thing because it's not coming from, it's just voluntary options for the employees, dental, vision, all those are included as well as the work site. And so the more that number grows, then that percentage credit will be offset for the trust.
All right.
And that's effectively the last item I have, but I do think that maybe requires a board vote on that piece, but I don't know. That's based on the agreement that we provided.
And I saw that there was a disclosure stating that we were authorizing Brown & Brown to receive payment from Metlife at 3%. I didn't see, is there another agreement out there that states how this process would work once you guys get that 3%?
There isn't. If you'd like that, we'd be happy to do that too, Brennan. It's just the one piece is the receiving the credit, and then how we do it, we can put it in kind of an operational letter of understanding or whatever you would like us to do to validate the process for it.
Yeah, I think that would be good just to have that in writing as well, that you guys are,
okay.
That we authorize you to receive that 3%, and then we can outline a separate agreement stating, or maybe an amendment or something to our current service agreement that you guys will refund the trust, whatever you guys collect under this arrangement with Metlife.
Or credit it. In this case, it'll be a credit to the invoice.
Sure.
Yeah, it's the
Sure.
way I'd envision it. Instead of paying this number, it's going to be a number less because we'll know what that number is, and that's where the dollar for dollar credit would be provided.
Okay.
So if you want me to, we can put a simple agreement in place, and then however you want to incorporate it in the current agreement, service agreement, or just a standalone relative to the platform. Either way, we can make sure we do that.
Yeah. So I think let's, as a board, take action on authorizing then the 3%, because we've got that agreement that's been made available to us from Brenna's message yesterday. That authorizing Brown & Brown to receive 3%, and then as part of that same action that the board would take, authorize an agreement between NDPHIT and Brown & Brown for that credit offset for whatever they receive in that 3% to offset whatever billing we have for EB Tech. So any questions or anything on that from board members? Okay, I would like a motion then to do that. So the motion again is first authorizing Metlife to pay 3% to Brown & Brown for all Metlife products, and then separately we'll have an agreement between Brown & Brown and NDPHIT for a credit offset. Whatever they receive under that 3% arrangement will be offsetting the EB Tech fees that NDPHIT pays to Brown & Brown.
I don't want to, change course, but I don't know if I know enough, honestly. I mean, and I feel like, I guess when I think about our board meetings I run in our district, I mean, when there's items that such as this, where I'm just seeing a bullet point, right? For example, on some of these items to vote on, that I feel like I need, what does this mean? I understand it's a savings, but it seems like a good deal, right? On the surface. And maybe we should go with it, but I just would appreciate maybe some additional information prior to a vote with some background, or maybe it's highlighted at a meeting then we come back to it. You know, I don't know. Those are my comments, I guess. It just seems like we got a couple bullet items and then we're gonna, whether it's Remedy RX or, you know, this tech credit or, you know, whatever, it just, I think we've got to start thinking about those things on whether or not these are great decisions or maybe they're not, you know, so I don't know, just a comment. I don't want to sway a vote. It seems like a good idea, but my thoughts.
I appreciate that. And that's something we can certainly, if the board would want to go that direction, it's wouldn't be too big of a deal, I can't imagine, Randy, to having this as the intro for this particular program. We've been provided already the contract between the proposed contract between Metlife and NDPHIT to allow the 3% payment to Brown & Brown. At the next board meeting, ahead of time, we can provide, or I'll have you guys provide the contract between Brown & Brown and NDPHIT, and then we can take formal action at that time once everybody's had a chance to review both the first agreement and then the Brown & Brown NDPHIT agreement as well.
Yeah, I mean, that's perfectly fine with us. I mean, we just did it as an idea to provide a savings to the trust. And so we can certainly just have it all together as one process if you'd like to do that, so you have more time to review it. Or,
I mean, you know, an example might be, you know, in our district, just again, I only know schools, right? So just throwing this out there that you have I have a finance committee. So if we're looking at making some kind of a financial investment, we're running it through that group, we're vetting it, we're having conversations. And so I appreciate that. I think that's awesome but at the same time, you know, I think we got to have a little bit of vetting that happens with board members through and maybe, you know, as we continue to grow as a trust, that we start to think about committee work, policy committee, finance committee, whatever committee, that way when it comes to the level of the board that we're comfortable because it's been vetted by somebody beyond the consultant. I mean, that's why we hire a consultant. It's important, but we need to also think about our own interests as a board.
Yeah, no, I completely on board with that. So for this particular item, Randy, everybody's been introduced to the concept. Let's provide the second agreement between NDPHIT and Brown & Brown. We'll allow board members to review that ahead of time. But Mike, taking you know, your comments, I think that's a very valid point that as we continue to mature here, and that's going to be an operational discussion that we've all had. Now I've met with every board member, and everybody kind of recognizes it's time for the board to take the reins here a little bit. And that's one area where we can certainly look and say, okay, sure, we've got to look at our operations, but it might be time for the board to put together maybe an administrative committee or, you know, or a finance committee, kind of all the above, just to do that additional vetting and provide you know, additional insight into what we're actually doing here for the full board. So I appreciate those comments. So no action today on that, Randy. I do have a couple of questions for you, separate from that, just going back to a couple of the items that you had talked about. When we're looking at those new groups coming in, I know you and I have had the discussion, but has PERS finalized their rates for their renewal at all? Have you seen that come through?
Well, only in that I don't think they have. From what I understand, we had one of our new team members, Tammy Terrace, used to be at Ward County as the HR director. She knows exactly where this website is, where they're talking about it. From what she said, she pulled up and showed it to me just the other day. It showed there they originally wanted like 20.6. And this one is now at 17.2. And then, you know, Kyle shared a different number, but it actually says on their minutes they're 17.2. But if it's anything beyond that or different than that, I don't know that. And Kyle knows much more about how they, you know, when they release the final number. But I think it's going to be some number between probably the 15 and the 17% as their final number.
Okay,
Yeah, so legislatively, we have 2 board members on there. Senator Dever is on there. And so I've been in contact with him in regards to, just out of a curiosity, and he indicated to me 15% and 0, 15 the first year and 0. So if 17.2 is out there, I mean, they still can negotiate a little bit in the whole thing. But like Randy said, I feel confident that what Randy said will be in that range. That's the information I have directly from Senator Dever. So because they have to have the number, because we have to have a budget number for it, for our health insurance for state employees and university employees. But sometimes that's not a direct reflect. I don't know that it correlates to some of the counties and cities directly, I'm not sure how that works. So that would be the minimum for them too.
Yeah,
They're
that's
not going to get a
what we're
better
told.
deal.
They're being told that is their minimum that they're looking at as well.
okay, thank you. All right, we can move on. The next item on the agenda is the audit. So Nora and Brenna, I'll turn it over to
Take it
you
away
guys.
from Randy then.
Brenna, do you just want me to kind of go?
Yep,
Yeah.
go for it.
Okay. Well, first of all, I want to say that Brenna and her group did the vast majority of the work with the audit team, which I know can be extremely time consuming, especially the first year. So got to give props to Brenna for being able to go through that process and everything. She's the one that did the work. I'm just going to kind of go through the reports and the letters from the auditors. Since in my previous life, before I worked for NDPHIT, I was an auditor in public accounting for almost a decade. So I kind of know the jargon a little bit and things of that nature. So Brenna just felt it would probably be better understood coming from me. So, but she is the one who did, like I said, the vast majority of the work with the auditors and getting this taken care of, which is not always easy for a first year entity. So the first document, there's 3 different documents. The first one I'll kind of go through is the financial statement, and that has the opinion on it. And they basically said that the financial statements are free of material misstatement. They gave a clean opinion on it, so everything was approved going through. One thing to note with that though is there was an adjustment that had to be made to the IBNR reserve from what we had booked in December. We had gotten the number from Mike at Brown & Brown, and that's what we used. And granted, like the data was new still, and so they knew that the estimation might not be what real exact. And so that it did have to get adjusted for the year end for 2021 up about $500,000, a little over $500,000. I believe the number was $501,255. So the financials that we were looking at for December that we compiled, all the other numbers stayed the same. Everything else was correct, but that incurred but not reported number did have to be increased substantially. So it went from like 1 point, I believe, let me look at the number exactly.
I get it.
From a 1.2 to a 1.7. So it was a substantial increase in that time. And so our income for last year kind of got wiped away with having that reserve expense being booked into the previous year. So you will see in August that affected our 2022, because originally when we got the actuary report from the outside actuary this summer and we adjusted this spring, all of that change in IBNR reserve happened, we put into 2022. Well, that wasn't accurate. Once we got the audited numbers, what that reserve liability need to be at year end, that expense from the reserve increase went into 2021. So it makes our 2022 income look a lot better by that $500,000, but it did wipe it out for 2021. And that's why there is a significant difference in what our internal financials said at December versus what the audited financial statements came in at. But other than that, that was the only number that changed, and we knew that that was a potential thing. One thing to note about that is, like at NDPHIT, we usually only adjust the IBNR like to actual once a year. We use an outside actuary. We hire them separately. we try and, we use is Aon, but they have experience, they work in the marketplace, stuff like that. So it's an independent actuary that will come in, look at our stuff that we have, and they'll give us what a reasonable estimate would be for the IBNR. That is probably something the trust should do as well. It's great that we have Brown & Brown to create an internal one, and stuff for the financials that we use internally month to month or quarter to quarter. However, at year end, when the auditors are coming in, it's good to have an outside actuary. It gives a little bit more control in that aspect too, as internal controls, segregation of duties, things of that nature. So it is something I would recommend going forward, is for our annual year-end financials that have to get audited, is the trust hire an outside actuary. And it can be the one that Brown & Brown had hired this past summer to use, or it could be another one that if any of the board members want to find something like that, or we can look into that. But for them to evaluate the information from Blue Cross Blue Shield and give us an estimate. We're required on the NDPHIT side to actually use an outside actuary, but I do feel it's best practice for the trust as well to use an outside actuary to come up with that number, just because it is such an important number. And the findings that we do have are kind of related to that as well. But the rest of the financial statements, our cash still stayed the same at 5.8 million. Our net assets did go down, so it did kind of look like it dipped into our member deposits because of that adjustment. Again, that was incurred but not reported at the time. That's why our cash was still in a good spot. But other than that, the rest of the financial statements, there's notes in the back that I Bailey prepared. I don't have the health trust knowledge to know exactly, or at this time, I don't have the education to prepare these and know exactly what's all required. So I Bailey prepares them, and basically all that information supports the financial statements and says like what's going on in there, and gives a little bit more detail. So about the activity, presentation, that kind of thing, what recognition of premium revenue is. So all of those things. Does anybody have any questions on the actual financial statements? Again, even though there was an adjustment, we still got a clean opinion because we knew when we were okay with them making that adjustment. And so the opinion is still clean on the actual financial statements that were presented. There's no questions on that. We can move on to the letters.
So Nora, this is Kyle. Let me just add a couple quick things. I Bailey did provide us, I sat in on the call and they did provide us a couple outside and they recommended us using outside actuaries. So, I mean, we do have a couple names from them, and that was a good suggestion through the process. So.
Perfect.
Nora, I'll stop you there too. I've got a couple questions as well. So Kyle, are you guys then gonna go out and find an option for an outside actuary that we could present to the full board?
We could do that.
Okay. Yeah, let's plan on doing that, and then the board can take a look at the recommendations and then go from there. And then Brenna, can you talk a little bit, or maybe Nora, you would know, the audited financial is one obviously for the board, but we do need to provide this to the insurance department as well, correct?
Yep.
Yes,
I believe so. I don't, on the other side we do, I'm assuming.
Right.
I think any insurance company, or even in this case, the trust, would need to submit their financials to the state.
Yeah, they were submitted.
Okay.
I believe it was August 31st they had given us a little extension for being new, but yep, they were submitted as when I Bailey was done. Mm-hmm.
Okay, thank you.
Yep.
We'll kind of go on, and like I said, if you guys want to interrupt me, I know I'm a fast talker. A lot of you know that, you know me from other things, but so feel free to stop me if at any point in time you have a question on anything. The next two letters are actually addressed to the board. They're to let you kind of know about the process. And we said, most of you, I'm sure, are in these meetings with your own auditors when you have them for the school districts or whichever political sub you're with. But so it's not something completely new. But the governance letter just talks about their responsibility during the audit, and that they're looking at the numbers that we're providing, making sure they're free of material misstatement. They don't look at every transaction, they don't look at every number, but they want to make sure everything's good as a whole. They have a materiality they use, things of that nature. They look at internal controls, and we'll get into that in a little bit, the separate letters on internal controls. But in there, they talk about like significant risks identified. And all of you should have seen that was a new pronouncement from the accounting standards, the auditing standards, as far as having management override of controls in the governance letter, because it's always going to be a risk, no matter the size of the entity or things of that nature. There's always a risk that a board needs to be aware of, that management could override the controls. That's not saying they found that here. That's not saying, and they do test to check that to see if it actually did happen, but they're just telling the board that's always a risk. Revenue recognition is another one that's always going to be a risk, no matter the type of entity that you have. It's required by the standards. For an entity such as an insurance company, insurance trust, loss estimates are also going to be, just because of the significance, like, you know, we mentioned. So IBNR's $2 million liability on our balance sheet. So obviously there's a big risk, and there's a lot of unknowns. It is an estimate. It's based on, you know, educated guesses and information that they have, but it's still an estimation. It's never going to be exactly on. But so that's why that's always going to be a significant risk area for an entity of our type. And that's again why it's always nice to help mitigate that risk by having an outside actuary look at that estimation, just because there is so much involved with that. So they talk about that the claims and IBNR reserves are the main liabilities here in estimates, and that those are looked at. That was one big thing to do. They did a lot of tests over it. In the letter, it shows right there, that's the entry that they made to get the IBNR to what they felt was a more reasonable one, because it was material adjustment. So that's what's in there. And the actuary, when they came back, was really close to where ideally was at too. So and you'll see going forward, the amount that I got from Mike at Brown & Brown in August for the June month end was up there in that same area as well. So at least we now kind of have an idea. You know, we've got it from 3 different places now that this is around the area it should be. And so it's probably going to be a little bit more consistent to be at that number. But there were no disagreements with management. Everything was provided. So they didn't have any issues working with Brenna and her group. Everything was provided. They didn't have any issues as far as that went. It was just a matter of having the entry, and Brenna had no problems, and I had no problems making the entry to the financial statements. Once it was recommended, they sent their audit work showing how they came to the new number. I know Brenna, I believe she said they went over, they used triangles and different things, this methodology, and they kind of showed that to Brenna and her group and stuff. So they kind of understood where they were coming from, why the adjustment was being made, why the new estimation was there. But overall, everything went well with the audit. I also did meet with Blake and Grant via Teams call towards the end before they finalized and stuff. And obviously, like I said, with the new one, there's always a little bit of challenges where everybody's learning things, but overall, they felt that the process went really well. And Brenna, you know, provided everything that they asked for that she could. There were some, you know, issues getting the information from Blue Cross Blue Shield, which Randy is very familiar with that issue. So, you know, ideally had some of the same issues, which is one of the reasons why it took a little bit more time, is trying to get some of that information from Blue Cross Blue Shield was a little bit time consuming for them. The last letter is about the internal controls. They evaluate controls and give opinion on it, and they talk about reasonably possible or probable, like if there's a material weakness, a significant deficiency in internal control, and they're required to report on them. They did find a couple here, but they're not as scary as they sound. I can tell you as an auditor, pretty much every small entity is going to get findings like these, not necessarily the one related to the reserve, but as far as segregation of duties, financial statement preparation, in an entity that size, it's impossible to completely segregate all the different functions that you're doing. You need a certain number of people. It's not fiscally responsible for the trust to try and hire 6 people to try and do this work. I mean, that wouldn't make any feasible sense. You can't hire that many people just to segregate these duties. But what they're saying is that's something then the board needs to be aware of, that these things are out there. So that's why you got to try and have different oversight in place, someone looking at it. You know, I'm as a board member and not someone administering it, you know, I prep the financials, so I have access to look at it. If I ever have questions on an expense, Brenna sends me the detail of that account, things of that nature. So we do try and implement things to help offset those, but there's still something that's there. It's a small entity. You can't completely separate everything. But the first one is that oversight of the incurred but not reported claim loss reserve. Again, having an outside actuary will help with this one and possibly get this one to go away. The other issue with this was the information Blue Cross was providing Brown & Brown to do their calculation didn't match the actual claims and stuff that we had paid on Brenna's end on the general ledger and the accounting side of things. So the reports he wasn't getting, or the reports he was getting, weren't complete for him to make, you know, the best possible calculation. So one of the things going forward that needs to be done is the reports that go to Brown & Brown for them to be able to get us a good calculation of the IBNR should also go to Brenna and Hunter in that group, so they can make sure what Blue Cross is sending him to create that calculation matches what we're actually paying out, matches the claims that we've paid and the things going out and the funding and that kind of stuff. So that's one thing that we can do to make sure, you know, he's getting all the information he needs to create that calculation. Is we'll tie it, she can tie it to the general ledger, she can tie it to the financials to make sure, yep, this is complete because it's matching what our books are, what our books show. And the case was that it wasn't happening before, and we didn't, you know, it was an incorrect assumption on our end that Blue Cross Blue Shield would give them the complete information that they needed without things omitted. But that was part of the problem as well, why the calculation was so low, is he wasn't getting all the information he needed that actually tied to our financials. So going forward, that's something that can be done, is once those reports go to Brown & Brown to help with that calculation, they also go to Brenna so she can make sure they're complete. The next one is for the segregation of duties and the financial statement preparation. Another reason we have the financial statement preparation is that material adjustment. If you have a material adjustment, you're always going to have a financial statement prep because they change the financials by a significant amount. So that's always going to show up when you have a material adjustment. Hopefully next year with the actuary there and stuff, we won't have a material adjustment, although we still might get a significant deficiency, or we'll still get segregation of duties. But currently we don't have anybody here within the organization that, you know, compiles. We have financial statements, but we don't have somebody who knows the footnotes. That's potentially something that maybe going forward, if I can get some specific education to the health insurance, I can do the financial statements. I've never written health trust footnotes. And so if we can get some education on like my end or Brenna's end to be able to do that, then that could potentially go away. We can write these financials before they go to the auditor, and then they're just testing them without having to write them. But that would be a potential, but that segregation of duties is probably always going to be there, just even strictly due to the size of the entity. But again, these are very common for a lot of entities, even bigger entities, who choose not to pay to have somebody who's trained in that specific, where it's easier for the board to be aware that, hey, this is what's happening. You know, iBailey's preparing them. But they're willing to say, you know, financially, it doesn't make sense to hire someone to do this or pay someone else to do this. We'll just accept the finding and know that that's one of the issues. And that's even said in there. Board of Trustees and management should continue to assess the cost benefit to acquiring the insurance reporting expertise necessary. So that, you know, that's why they say it's because they know for some entities, it doesn't make sense from a cost benefit standpoint to have that.
Nora and Brennan, I don't know if you can answer this question or not, but when I'm looking at the oversight, incurred but not reported claim reserve calculation, and that Blue Cross Blue Shield wasn't providing the most up-to-date claim information to be able to provide our actuary to do those reports, was it just an administrative error, or what was their, why did they not get the most updated information to do that?
I can speak to that, Jenny, because we've had significant problems. And actually, I shared this audit report with Blue Cross because the deficiency that was noted has to do with the fact that they didn't give us the reporting when it was required, even though we asked many, many times, you know, and effectively, it got down to the fact that, you know, it ultimately was a staffing issue, that they lost a bunch of people in their reporting department. And I said, well, that's a reason, but that's not a good excuse, because that creates huge liability for everybody, not just the trust, but other self-funded groups when they're counting on ensuring that calculation is done right. Because as Nora mentioned, once we got the updated report, we actually did match fairly closely to what the IBNR calculation should have been. But because of the deficiency, and ultimately what we're realizing, what Nora is saying, is that we need to have a double check. It's, what happens when Brenna gets data, and then what reports we're getting from Blue Cross. And this is also on my agenda next week to visit with them on, because it's such a big issue. Anyway, that's the reason that we finally got to the bottom of it, Jenny, is they basically just didn't have the staff in the reporting department that they normally had. And the person that did do it, she was somewhat new. It was a real challenge. I'll just leave it at that.
But this way it's a double check. If Brenna can, get a copy of that same report that's going to them, she can check and make sure that it appears reasonable based on our numbers that she's been paying and the invoices she's been paying, so that if there is a big gap, we can go back to them and be like, this doesn't match. You aren't giving us the correct information. We shouldn't have to, but at least this is ways going forward that we can help prevent this from happening again.
Yeah.
And then are we providing a response to Eide Bailey then for this material weakness and significant deficiency to, at least show we're making a good faith effort in trying to correct these areas?
We had a conversation,
Okay.
but they don't ask for management responses anymore in the letters. These are the final letters. They used to have where the management response was in there that, we accept this deficiency. We're not going to be able to add staff, but they no longer require that for the audits. So it's just a conversation of, and that's one of the things that came out of the conversation, is this is something we can do, have these reports also sent to Brenna for her to be able to reconcile. Same with the financial, and we said that too. It's like, we have we have SEEK doing the administration for the fund, but we don't have enough. There's just not a fund can't do that. So it was part of like an exit kind of conversation. And I know they also had one with SEEK as well, to kind of go over what they need and what we're going to try and do going forward. And like I said, that's where the discussion happened about, and I said I'd bring it up here too as well, to make sure that the board considers doing the outside actuary and stuff, just for another level of control and things of that nature. So.
Okay, thank you.
Okay, any other questions for Nora on the audit? All right, I think we can move on to current financials.
Okay. So July and August are both in there, but we'll just go over the most recent one, the August one. July, if you do take a peek at the July was a little bit of a rough month for loss ratio, but August ended up being a little bit better. And again, I do want to point out that it's going to be different from the June financials that you guys got, because I did move that IBNR adjustment out of the current year, out of 2022 back into 2021. So it decreased our starting members' equity to start 2022, because we put that loss over in 2021 to be appropriate to match with the audit. So it did. So you'll actually see a significant increase to 2022's income, because we no longer have all of that adjustment here in 2022. But on the balance sheet, as you can see, still healthy. Cash flow, $6.5 million in cash. 3.1 of that is the member deposits, the original member deposits. So as far as cash flow, but we haven't had to touch any of that, and we're still sitting in a good spot cash flow wise to make sure all claims get paid timely. Accounts payable, what that is so for August, it would have been the August claims that didn't get billed till the beginning of September that we book back into a payable for August, since that's the period when they were actually incurred. We just didn't get the invoice for them until after month end. IBNR reserve. So it actually is down. Let me see. Hold on. Sorry. Okay, sorry. Like I mentioned, it's down a little bit from where the actuary booked it for back in April when they did it, but not by much. I think maybe 40,000. So it's staying fairly consistent now. It was close to 1.8 at year end. It was up to about 2 million, a little over 2 million when the actuary adjustment, when we got that actuary adjustment. And then after Mike got information for June, in August, he sent that report and it was down to a little under 2 million, 1.976 is where it came up with. So staying fairly consistent, which would be expected since no new members were added in that interim from when the actuary came to when we did this last one. But this is still the number from June. I did talk to Mike. He did just get information from Blue Cross. Again, there was a lag in information. So he's going to start working on the next month's reports, but June is the most recent one we have. So that number stayed the same in both July's financials and August financials. So that's what we moved it to. But you can see we're back to where our member deposits are still intact. Our membership equity is up a little bit from year end. So that is good to see. So the operating surplus, it's not much, but the operating surplus is 96,000, whereas, and the full member deposits are intact again for members equity, which wasn't the case at the end of the year. And if you look at the income statements, I have it highlighted where the IBNR reserve changed. So that changed significantly. So we've only changed it. It's increased about $200,000 for 2022, which is different than the last time we reported because we had booked that whole big adjustment. And like I said, that 500,000 had to go back into 2021. So as far as year to date, it definitely helped 2022's numbers look a little bit better, even though 2021 took more of a dive. But you can see the net earnings year to date are about $500,000. So it definitely took the loss ratio back down through August. So our loss ratio before IBNR is at 94% year to date through August and 95% with the IBNR adjustment. So much better than had been, much better than the year ended. But we have, each month can be a little bit different. We had a lost month in July and then August was a really good month. So it can fluctuate a little bit. But overall, like I said, year to date, having $500,000 in net earnings definitely helped bring that membership equity back up. Any questions on the financials?
Okay, thanks, Nora. We'll move on to the next item, and that's the board election coming up. So, Brenna, I'll turn it over to you for that one.
So this is Kyle. So we have to select 2 or 1.
Yep. So we've got one non-school political subdivision up for re-election. That's Cole Higlin's seat. And then we have 2 school seats that are going to be up for election. Paul, the seat currently occupied by Paul, and then the seat formerly occupied by James Kramer, who was in the non-school political subcategory. But because of the way the board composition is set up based on group numbers, James's former seat now transitions to a school seat. So we'll have 2 school seats on the ballot and then 1 non-school political sub seat on the ballot for this upcoming election.
So from a formation standpoint, are we looking to form a committee to look at this?
Yep. So, and this would be a question for the full board, and speaking a little bit to Mike's point earlier, there isn't anything currently set up in our bylaws or in our trust agreement or anything like that to review applicants or nominations for the board election. But obviously other organizations, and speaking to the NDIRF process at the reserve fund, each year there's a certain number of seats that are up for election, and there's a nominating committee. And the task of the nominating committee is to review nominations and then provide recommendations to the full board for placement on the ballot. And we can, as a board, determine criteria for acceptable nominations, or the nominating committee could come up with their criteria for their full recommendations. But that'd be something for the board to consider. We've not set that up, and what we did initially for the board election was just a general call for nominations. And then anyone, that was nominated was placed on the ballot, and then it was up to the membership for election. Given the timing of this, our next board meeting will be after the election, because we're looking at a call for nominations in October, an election period in November. It would be a challenge, I think, for an establishment of a nominating committee for this particular year, but something to keep in mind for next year. And I think just generally, stepping aside from the board election, but just generally with committees, going back to Mike's comments and looking at how we're maturing as an organization, I think it would be a good idea for the board just to have some standing committees that we automatically the chair can appoint members to, and that's something we could consider at the board meeting in December, is establishing committees in 2023 where we look and say, okay, do we want a finance committee? We want some sort of admin committee? Do we want a nominating committee? Those are all things we can evaluate in December. And then we would have that guidance once we have the full board and the new members in 2023, the full board to do that. In the near term, though, as mentioned, I think it might be a challenge to get that nominating committee established and then provide recommendations to the full board prior to the election taking place. But we could certainly look at doing something. So I guess I would open up to the board for comment on that. The current setup, again, is just a general call for nominations, and then those folks are placed on the ballot. But would the board like to take a different direction on that?
I'm okay for this go round to do that, like you just explained, that we do similar to what we did the last time, general call, and then go from there with the vote.
Okay, thanks, Steve. Any other comments?
So this is Kyle. I'm just going to make a general comment, just from my experience with boards that I've been on and the board that I have. There may be some benefit to have a business manager on our board that is experiencing something different than our school superintendents or our county or city representation, so as we're thinking about people and criteria, how do we continue to diversify the board with different perspectives as how the trust touches them and the feedback that we need. So that's just a thought from me. And the board can do whatever they want with it, but it's I think we're missing that perspective a little bit.
Kyle, are you saying like a school district representative, not necessarily the superintendent, but could be
a business manager
from that school?
Mm-hmm.
Yes.
Okay.
Brennan, and I don't know, correct me if I'm wrong, but when I think about the Insurance Reserve Fund Board and looking at having county positions, you lean on us as the Association of Counties to come up with names that would be good members to bring on the board. Is that something that we would maybe want to work with the associations on? I know particularly they need to know which entities are there, but like from the school's perspective, if the School Boards Association knows that, out of the 46 schools, there's, 4 business managers or 2 business managers or whoever we decide to select, could they help us make some determinations? Or I'm struggling a little bit with the leaving it open at large, because if we're looking to fill some gaps for expertise on our board, I don't know if we would necessarily get that if we just open it up to whoever would like to put their name in the hat. I don't know.
I think to answer your question about the NDIRF board, Jenny, that's not a formal process with the Association of Counties or the League of Cities. We don't have anything within our bylaws or even our board policy manual that the counties or the cities are responsible for coming up with their own candidates. It's just I think kind of just how the process has come to be, though, that the Association of Counties takes it upon themselves for the NDIRF board purposes to basically nominate within their own membership a candidate for the board, who then is responsible. That candidate still has to apply and go through the nominating process at the NDIRF as well. Obviously, at the reserve fund, if the Association of Counties comes forward with a candidate, the NDIRF board's not going to, likely won't turn them down. Now, with that being said, we have had candidates at the reserve fund that have been presented by associations that the board has not accepted. So that particular process isn't, it's I guess it's still a general, we still have general applicants, and we still vet those. Just looking at it from a, how we'd be able to do that this year. That's where I struggle with. I see your point, Jenny, that we may want to evaluate a nominating committee because of that, looking at qualifications and what we would, what the best fit might be for the board. But for this particular year, I think that might be a challenge, just given the timing of it all.
No, that makes sense. I know it is a quick turnaround time to get this completed. So would we be looking at having an email sent out to the membership then to just ask if there's any interest, and then they can apply?
So the process we had in 2020 when we were forming the first board here was just that. So there was a general call for nominations through email. And I believe there was a survey link that was sent out where folks could fill out, hey, your information and different qualifications. And then those candidates, we can compile those candidates that are nominated with some additional information. We'll compile that through Seek, and then Seek will send out a ballot to the NDPHIT members that they'll be able to vote on who they would want on the board.
Yeah, I think that sounds like a good process based on our timing.
Okay. So I'll take Steve and Jenny as a motion and a second. Is there any discussion or further discussion? Okay, all those in favor of that process, please say aye.
Aye.
Opposed? Okay, so we'll move forward with that, and then keeping in mind, in December, we'll look at establishing some standing committees for 2023 once we have the new board members in place. Kyle or Brenna, anything more to add on the election?
I'm hoping Cole wants to stay.
It's the second meeting. It's already a little overwhelming, but I definitely would.
Okay, well, we've got Cole on the ballot then.
Yeah, and I expressed my thing, and again, it's a board decision, but I'm not sure that we necessarily, how do people know that a business manager can be part of that? We don't have bylaws or anything that says a superintendent or a principal, for that matter. I mean, that's my only question as we do the communication piece. Is that something that you're thinking that is a good idea? You're not going to hurt my feelings. I just want to do what the board wants to do, is why I'm asking.
Yeah,
go
ahead, Jenny.
Well, I was just going to say, I do appreciate the perspective of business manager. Someone who's dealing in the day-to-day operational piece would bring a different perspective, I think, to the board.
Now, if you look at the agreement, it states they'll be the superintendent or the superintendent's designee from a particular school district. So we could elaborate on that when we send out communication, just clarifying that can include a business manager or somebody else on staff at a school district. As long as they're the superintendent's designee, I guess, from a member school district.
Okay. Good clarification. We'll work from that perspective
Okay,
and develop something to communicate out.
okay, perfect. All right, thanks, Kyle. Last bullet or last item here for discussion with the board is operations strategy for NDPHIT. And this is a topic that every board member has been briefed on a little bit. I spent the last couple of weeks just meeting with all NDPHIT board members and finished on my last meeting actually today. And just kind of giving some background on where we're at. And the bottom line is we've matured as an organization to the point where I think it makes some sense for us to, as a board, to take the reins here and really determine, how we want the operations of NDPHIT to go. And we certainly appreciate all the work Brown & Brown does, especially on the analytical side with underwriting and actuarial services and, providing recommendations with regard to, Blue Cross Blue Shield issues and so forth. But there certainly is in communicating with members, and I can say that all discussions I had with board members, it was unanimous that everybody's got their own unique situation, but by and large, the NDPHIT member engagement, the member experience, just isn't quite where we want it as a board. And as I mentioned, that was a unanimous thing. Every discussion I had, that was the same response. And so it ended, every discussion kind of ended with, okay, well, where do we go from here? Everybody appreciates that we need to do something to take a better look at the member engagement piece and look at the operations and understanding where that's at. And discussing with each individual board member, came up with kind of a summary of next steps that we can take. And this is open then obviously for discussion amongst the board, separate from my recommendations. If we want to go a different direction, that's obviously that's A-okay with me. But summarizing kind of the reaction as far as next steps, first, there are certain areas within administration, and I think they came up today in the meeting when you look at who's going to be responsible for looking at outside actuarial candidates then to be presented to the board, or who's responsible for administering the board election. So there are some short-term things, and then member relations and member engagement where Angie's going to be doing a lot of that work on behalf of SEEK and NDPHIT. There are some short-term things here that we've got to address, and that's where SEEK comes in. So looking at bolstering SEEK's responsibilities to the trust to take care of some of those short-term needs, that they're willing and able to do that. But that would include also a transition of some dollars that are included already in the NDPHIT premium calculation that were intended to go to regional education associations for their marketing assistance of NDPHIT. And we would reallocate those dollars that were originally intended for REAs and allocate them back to SEEK. So we would take action as a board to say, okay, SEEK, we're going to vest you with some additional responsibility, but we're also going to increase those dollars that are allocated to SEEK, and that would the goal of that would be to take care of the short-term operational administrative need. But in the long term, we've got to evaluate what our best move is from a board standpoint, and that's where I'd ask that the board create a task force, and that task force would take a look at NDPHIT operations, sit down with Brenna, sit down with Kyle and Angie, and sit down with Randy and understand the ins and outs of what's needed on the operations side. And then from there, that task force could make a recommendation to the full board about what, in their opinion, the next steps are for a long-term operational model for NDPHIT. Likely it will include some strategic planning and setting some goals and identifying where we want this to go long-term, and then looking at our budget and looking at the needs that we identify and say, okay, here's where we think the best operational model will fit. And then moving on from there. And that process would take place here in the coming months. That task force would also work with SEEK on an ongoing basis to provide some guidance in the short term on different operational issues that might come up that SEEK would want guidance on. And then ultimately, like I said, making that recommendation to determine what our next steps are. So that's, in summary, what I've gathered as a general consensus from the board on next steps. But I've also asked board members in the meetings that I've had, say, hey, chew on this a little bit. And is there something more that you're wanting to do, or, do you have different ideas? And so I'll open it up now for discussion to determine, if there are any other areas that we want to get into or handle things differently than what I've outlined.
This is Cole. I'll go first since I'm the newest member, I guess, and up for election. So take it for what it's worth. But I commend all of you. A lot of learning was going on. I didn't know who I was supposed to direct questions to. I really thought it was Brennan. I thought North Dakota Insurance Reserve was a parallel company to this, and then I found out how SEEK's role was. I think onboarding was a little difficult for the short turnaround with James leaving, but I'm surprised where we're at here today in regards to not having some kind of executive director or something that can do all this research. And going back to the question earlier, having the supplementary information in advance to be able to make judgmental decisions based on $50,000-$60,000 decisions without having someone with the committee. I agree 100% with those committees. Makes so much sense to help vent the process. My question is, what is an agency that just started this self-funded health insurance in other states or other areas? How do they operate compared to what we're trying to accomplish here today? I have no idea how those parallel in regards to 3-year, our volume numbers are where they need to be, but do they have a director? Do they have a board with better hands-on, or how does it work? I guess that's the question I have, and I don't know who would answer that, whether it's Kyle or Brennan, but I really like the aspect of knowing that we're under the North Dakota Insurance Reserve. That sold me on North Dakota FIT. Yes, being self-funded, but how successful the insurance side has been. And then I just looked at it as a parallel company, as a subsidiary running it from there. So that's my question is from our size in comparison to other agencies, whether it's in the state or outside the state, do they have an executive director, and how do they operate and function in comparison to how we function today?
So I guess from my standpoint, this is Kyle talking, those, from a time standpoint today and what the time of day it is, there needs to be, so I have people, service agencies like ours, who run the health insurance trust in Kansas out of Greenbush. All right. They've been doing it since 1992. So, there's lots of different ways. In Minnesota, they run a lot of it, but this is for the school districts. The one in Fergus Falls does it, but they all have little different models and a little different ways that they do it. And I think that's the purpose of the task force. And that's where that work and that research and those reallocation to dollars goes, is the time and the commitment that we'll put forward to start to build some of that foundation and put those questions. That's why I've talked a little bit more today. I asked the question about Remedy RX, is that a competitive bid that we got? So there's a number of organizations that I've started similar to SEEK and things that we do within SEEK already. And there's some that we let go eventually, and there's some that we keep. And I think what we're trying to do is bridge those baby steps that we're taking as an organization and some of these bumps in the road. And we're trying to grab the reins and say, okay, we know how to do this from a SEEK standpoint, from my leadership standpoint and my staff, and with Angie on board. And then longer term or midterm or by the end of this fiscal year, meaning, anytime in the future here, what that task force wants to bring forward, then we can have discussions along the way, and then there can be a decision point. But I think part of forming that task force is to get this short-term thing, getting it organized. I've been involved since the beginning, Randy and I hopping in a car when we had nobody, right? So I think that's a process, Cole, that we need to go through. on that task force, and that's the purpose for creating it. Because there's many different models is my point. And what model works for North Dakota, that's what the task force can peel away and say. And eventually what happens when you just to jump to an executive director job without really, it's more than just one job, because you would need a Brenna job, and you would need that there's more than one person. So you wouldn't just hire one person, you'd have to hire 3 people. And how does that transition, and what is the process, and what is the knowledge you're losing by bringing people on board, and what's the time frame you bring them on board to make that financially beneficial and making it as smooth as possible for the members. And in the end, and making sure that the trust is being taken care of at the same time. So there's a lot of parallel processes that brings us to Brennan's recommendation of that task force and the work to be done.
And I also think too, I know there are entities out there that have maybe like you said, Kyle, a similar setup. Obviously, everybody's is a little different, but I don't think we need to recreate the wheel. I think as that task force is created to be able to network with some of these entities, find out, if they could do it all over again, what are the top 3 things they would do? What were some of their struggles? I think we're early on, obviously, in this process where our members are still allowing us a little grace and patience in working through the process. But I also know that we're all member organizations in some form or fashion, and we want to make sure that our members are being taken care of. And so that outreach piece, that education piece, I think is critical. As far as thinking where our priorities are, yeah, I think the administrative side, and then understanding what that authority is too, because I think from a board's perspective, there was just kind of an assumption that SEEK was taking care of things, or maybe Brown and Brown was taking care of things, but I don't think we've really outlined those responsibilities and where they are, to understand the autonomy of decision-making that you have on behalf of NDPHIT, and then what that role of Brown and Brown is, as far as, is it more of a consulting area? Should they be more involved in things? So I love the idea of a task force to be able to come up with some of those parameters and guidelines.
Yeah. And then what you're saying is, then what are the checks and balances? How do we as a board say, this is what we want the plan administrator, these are the checks and balances between the consultant and the plan administrator, and how do we want that to look?
Yep, exactly.
Okay. Great discussion so far. Any other discussion on this particular area? Okay, so the first.
Brennan, okay. No, I was just going to say, I think you need 2 motions is what I was going to suggest.
So the first motion is to reallocate those dollars that are currently built into the NDPHIT premium that are intended for REA marketing, reallocate those back to SEEK. And that's roughly, $2,300
a month.
$2,300 a month. There you go. And Kyle, correct me if I'm wrong, but I think you had mentioned that you had visited with some executive directors of those REAs and gave them a heads up that this was happening.
I had mentioned that it's a possibility.
Okay.
And how what was their take on it, Kyle, when you talked to them? Did they understand?
Yeah. So when you start this process, again, trying to be short with my answer, but when you start something like this, when Randy and I are sitting there and we're trying to figure some things out, we're trying to engage people and trying to figure out how to create an infrastructure of help and support. And so initially we thought the REAs, and they played a role. They invited us to meetings and they were helping us do some things. But at this point in time, they're just getting dollars. There is no support from that standpoint anymore. And they know that, right? And in fact, one of them called and said, so what is this check for again? They actually called us, and we said, well, that's part of what, but I said that might be changing. So they're aware of that.
Well, I appreciate from a board member's perspective that SEEK is willing to step up and bring Angie on board to help with resources with that. So if we're looking for a motion, I so move to allocate the funds from the REAs to SEEK to provide that additional support.
All right, thanks, Jenny. Okay, thank you, Paul. And yep, and so we've got a motion and a second. Any further discussion on that? Okay, all those in favor say aye.
Aye.
Aye. Opposed? Okay, so we've got that taken care of. So we'll reallocate those dollars to SEEK. The next item is I'd like the board to consider creating the task force. We'll need formal action on that. There isn't anything that's already established in our bylaws or in the agreement or anything like that. So we'll have to have board action to create the task force. And then separately, I'd also like the board to consider how they want that task force formed, whether that's chair appointed or otherwise. But that would be an area where we've got to have a motion to create the task force, and then also discussion about how to fill that task force. And from my recommendation, and this is just me thinking about it, it'd be chair appointed with 5 members, 2 from non-school political subs, 2 from schools, and then the NDIRF representative as well. So 5 total members that way.
Do you need that in a formal motion?
Yes.
So move. So move.
Okay. Thank you, Jenny.
Whole second.
All right. Thank you, Cole. We've got a second. Any further discussion? All those in favor say aye.
Aye.
Opposed? Okay, we've got a task force that will be created, chair appointed with 5 members. And I'll appoint Cole and Jenny from the non-school political subs side to work on this. And then Steve Hall and Mike McNeff from the school side to work on this. And so we'll have a 5-member task force. The idea is we'll probably circle back as a task force here in the next couple of weeks and just kind of sit down and figure out how we want to structure this. But I would anticipate, maybe every couple of weeks having a Zoom call and starting a formal process of evaluating operations with the SEEK staff. And then secondly, answering any questions or providing guidance on an ongoing basis to SEEK as well. Okay, any I guess any comments or anything to wrap up this particular item? Okay, well, thank you all for board members and SEEK staff for taking the time over the last few weeks to evaluate this. I think it's an awesome opportunity for us. We've seen tremendous growth, and we're at a really good stage with NDPHIT. And financially we're in a good spot. Now it's an awesome opportunity for us to kind of take the reins and grow this thing into the organization we've all envisioned it becoming. So I appreciate your work so far, and appreciate the opportunity to continue it. The last item on the agenda is the next NDPHIT board meeting. The other thing that came up in my conversations with board members over the last couple of weeks is unanimous support for more in-person board meetings. Everybody felt like those were, or that was tremendously helpful in July. And I think you can certainly feel it even, in this meeting today. Just don't have that same camaraderie and discussion that you do have with in-person meetings. And so we'll try a format moving forward. And Jenny, as the chairperson in 2023, you'll be able to have some influence on this as well. But for the time being, the next board meeting will be in person in Bismarck, and we'll look at a December timeframe, and targeting likely that middle of December. But we'll send out through SEEK, a poll to find out what's going to work best for NDPHIT board members for that in-person meeting in December.
Brennan, just on NDPHIT meetings, we actually go east, west, north, south, so everybody has equal kind of travel. So I just think it's fair to make everybody do equal travel if we can. And they can locate the sites however you want to do it. But moving it back and forth seemed to work well for us to have 5 members all across the state too.
Sure. And we can do that. Was there, do we want to look at maybe doing a Fargo meeting in December instead of Bismarck?
So somebody that travels a lot and, and I appreciate moving it around a little bit, but that's a long ways to drive for Steve. And, I mean, it doesn't matter to me. I'm just telling you from somebody that travels an awful lot as you do, Brendan. I never worry about the central location of Bismarck, but maybe it's because I like to travel there.
Yeah. And to kind of follow up on that, the conversations I had with board members, by and large, that was a good location for folks to get to was Bismarck. I think I didn't have anybody push back on that, but certainly, if anybody has any other ideas, we can evaluate that. Yeah.
I mean, it's great if we want to host it in Fargo, we don't have to drive. So I just want to be when people, I know how busy schools are and how everybody's busy that, that it's a lot of travel time from west out to Fargo. So.
Yeah.
But the board can decide where they want to hold it.
Without any other comment, we'll continue on with Bismarck. I can't imagine Cole having his arm twisted too hard for a Bismarck meeting. So we'll do Bismarck in December, and then we can look at that down the road. So look for a poll coming out from Brenna or Angie on this, and we can get rolling on it. And that's all we've got on the agenda. Any other discussion items from the board? Okay, we'll go ahead and adjourn. I appreciate everybody taking time today and really good discussion. So have a great rest of the day and Good Friday tomorrow.
Thank you.
Thanks, Brennan.
Thank you.
See you.
Bye.
Bye.